Hi everyone, and welcome back to Shepherdson Company. I'm Ariana, and today we're breaking down your balance sheet and sharing practical tips to help you better understand what to look out for. Let's get started. A balance sheet, or a statement of financial position, gives you a snapshot of your business's financial health at a specific moment in time. Think of it as pausing your business story and taking a picture of everything you own, everything you owe, and what's left for you, the business owner. So assets minus liabilities equals equity. This is the accounting equation. And here's a helpful tip. If this equation doesn't balance, then something is wrong. Either there are missing entries, incorrect coding, or there's an accounting or bookkeeping error. Now, assets are what you own, and these are split into two categories. Current assets. These are assets you'll use or convert into cash within 12 months, such as bank accounts, receivables, and inventory. Tip number 1. If your accounts receivable keeps growing, but your cash isn't increasing, it can signify a collections problem and not necessarily a revenue problem. Now, non-current assets are long-term items such as equipment, vehicles, and office fit-outs. Tip number 2. Depreciation on these assets reduces the value on your balance sheets, but it's a non-cash expense. This is one reason why a business can show a loss, but still have plenty of cash. Now, the key takeaway is that strong assets equals more capacity, more stability, and more borrowing power. So liabilities are everything your business is obligated to pay, split into current and non-current liabilities. Current liabilities include tax, super, supplier bills, payroll, and anything due within 12 months. So tip number 3. If your current liabilities are often higher than your current assets, you're running too close to the edge, and this is a red flag lenders notice immediately. On the other hand, non-current liabilities are loans and longer-term arrangements. So tip number 4. Borrowing isn't bad, but you should check one figure regularly, which is your debt-to-asset ratio. Usually, anything above 0.6 means you're getting highly leveraged. Equity is the value left after subtracting what you owe from what you own. This includes capital you've contributed, retained earnings, and profits kept in the business. Owner's capital are money or assets initially invested by the owners or shareholders to start or grow the business. Retained earnings are profits a business has earned over time. It is the accumulation of all your past profits and losses. Additional capital depends on the entity structure. For sole traders and partnerships, additional capital usually comes from owner contributions. Whilst for companies, additional capital can be raised through methods such as issuing new shares or bringing in new investors. So why is your balance sheet important? Your profit and loss shows performance, however, your balance sheet shows survival. This statement tells you, can you pay your bills? Are you growing or shrinking? Are you over-leveraged? Is the business building actual value? Do you have enough working capital to breathe? Here's a bonus tip. Look at your balance sheets every month, not once a year. Most businesses don't fail due to low profits. They fail because they run out of cash. So let's walk through a quick example for ABC operations. Overall, the organization is in a strong financial position. It has total assets of $2.36 million, total liabilities of $1.16 million, and net assets of $1.2 million. That tells us that the balance sheet is solid, well structured, and backed by a strong asset base. There are, however, a few areas worth keeping an eye on. The accounts receivable, which is relatively high, so cash collections should be monitored. There's a small current year loss, hence we'll need to analyze the reasons behind this and determine whether this is due to timing or operational deficiencies. And as there is a high property-related debt, we'll need to ensure repayments remain well supported by cash flow. That's the balance sheet with some tips you can start using today. If you want a personalized review or help understanding your numbers, please feel free to reach out to us at Shepherdson Company. Don't forget to like this video or subscribe for more practical accounting insights. Thank you for watching.